Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As I do each and every week, I leave the lines on the chart from last week's report so you can see how well the forecast turned out. And right here, let me just zoom in just a notch here. You'll see that last week I drew this diagonal line pointing down with the end of that line right there, as I magnify that, being the target. And yesterday, right there on the 25th of March, we hit that precisely, bounced off the moving average, and the oscillators turned back up. So what does that mean for next week? Well, we closed with a strong volume spike towards the end of the day today, and the thing that we have to keep an eye on is this resistance right here. See that high from last week. Now, if you're following along with my reports, you'll know that I talk quite a bit about role reversal. And role reversal is when you have a resistance point such as this. When it breaks, it turns into support. But the key idea here is that that has to hold support. If the markets go up and fail to stay above that line and we start to pull back, then that's going to be taken as a weakness. So keep an eye on that. For next week, I think Monday and Tuesday, we are going to break out into that high. And then we have to keep an eye on the volume below, because if the volume starts to drop, then the buyers start to run out of momentum and then the sellers start to take their profits. So that's my forecast for next week. Now, if we take a look at the Russell 2000, this is ticker symbol IWM. Last week, I drew my forecast lines and I said that we would most likely break out below support. That's exactly what happened this week. The end of the line, again, right there, was my price target. We hit that and even went beyond that price target. And now what we see is a drop in volume on the way down. This is a sign that the sellers are losing momentum. In addition to that, we have a buy signal here on the CCI. So this is all good news for the buyers, because as I erase all these lines, you'll see that my forecast is going to be pretty simple. I think we're going to break out over that moving average, maybe even go a little bit higher than you might think. But here's the good news for the bears in the room at this particular point. I don't think that the IWM is going to break out into a new high. In fact, I think we'll start to tire at this level. You have to keep an eye on the volume. And if we pull back from this point right here, you really have to watch out, because at that point, any kind of a pullback would be taken as a head and shoulders pattern, with this being the left shoulder. Here we can look at that high as the head of the pattern, and this would be a right shoulder, with this support level down here being the neckline. So again, you have to be very mindful of that, because when a head and shoulders top starts to show up, all eyes are on the neckline. A breakout below that neckline would mean much lower prices, as it is defined as a top. You just have to, again, use good risk management principles when you're looking at a pattern like that. So that's my target for IWM. Short-term upside is going to be 230.94, and then the pivot point will most likely start to form at that point, and we'll pull back. So it's IWM. If we look at the S&P, SPY, you'll see, again, leaving my lines on the chart from last week, the lines were very close here. My target was right there. We came within 50 cents of hitting that target. We did not hit it. Instead, we bounced. The same story is going to take place for the S&P. I believe that the market will break out into that high. Again, that's exciting news for those who are buying or along the market. But once we break out over that high, and again, I think we will, then that high has to turn into support, and then we have to maintain that support. Otherwise, we could see a failure to the downside. Remember, I put a lot of emphasis on these monthly charts, and you can see that on the monthly charts, we're very overextended. The oscillators down here are not looking as bullish as the other markets, or at least the daily charts. And this is one of the reasons why I constantly talk about risk management, because if the markets pull back to this moving average, that would be a significant drop. And of course, if it breaks out below that monthly moving average, then that would be even more significant with regard to risk management. Taking a look at the VIX on the monthly chart, you'll see another interesting thing happening here is that we're approaching the lows for the VIX. Remember, the lower the VIX goes, the more bearish the markets become, because for the most part, the VIX is inversely related to the S&P. If you look at the weekly chart here on the VIX, you'll notice a gap down here. See that? That would be a gap fill point. The VIX could absolutely fill that gap. Now, if you're, again, following gap fill principles, you'll have to understand that 80% of the time gaps fill. Looking at a daily chart, what would that mean if that gap fills? Well, second part of the rule is, once the gap fills, there's now an 80% chance that the market or the VIX will reverse from that particular point. So if we go ahead and touch that line, there's an 80% chance that the VIX will start to rally, which in turn means there's an 80% chance that the market can pull back. And if you think about what I've said with all the other markets, remember, we're looking for a short-term rally, but that pullback is right around the corner. So make sure you are trailing your stop along the way as prices move higher. Now, if you're interested in following along with me on Twitter, for those of you that are on Twitter, just go to @TheOptionsOracle. You just click on the follow link right there. I put a lot of information out on here through John and Pete at Market Rebellion. John and Pete are the personalities on CNBC. We all work together, and I'm sure you're going to like their content. So that's for Twitter. Again, @TheOptionsOracle. And again, you would be doing everyone a big favor if you like and share this particular video, because it helps with the algorithm. It helps with passing on this good technical analysis information to people who are just learning it. If each and every one of us become more or less an ambassador to technical analysis, then we're helping people manage risk, and we're helping people with their forecasting tools. So with that, you have a great weekend, and we will talk to you soon. So long.